everybody, what's up? It is Monday, December 14th. Big news! Joe Biden is officially president. If you hadn't known that up until now, it looks like today it's official because the electors cast their votes in the Electoral College, and he has enough electoral votes to be declared president. Now, of course, he won't be sworn in until January 20th of 2021. So until then, it is a lame duck presidency here, a lame duck Congress, and actually, I guess that's okay because we're not going to see any major policy changes, and as long as that is the case, it's status quo. It's what I've been talking about. It's the fiscal flows that are keeping the market pumped up, and that's just going to continue. Now, today was an interesting day. Some people might think, well, it's maybe a reversal because the Dow was up strongly early on, and then it kind of faded, and we ended up, I think, down, not sharply, but we were down. NASDAQ was still up. It's another one of these fake outs, I believe, because the overriding fundamental continues to be the fiscal flows. And as long as they are as strong and actually expanding as they are, the market's going to have the necessary support. And you could stay in this kind of overbought, highly bullish sentiment environment for a long period of time, because the financing basically is there to keep stocks moving higher. Today is Monday, so I sent out the new issue of MMT Trader. If you want to get a copy of that, of course, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Remember, I think I'm going to be removing the 30-day free trial in January, and the subscription price will be going up to $500 a month. So act now if you want to, get the current offer. Interesting thing we saw last week. I've been following the Fed's Forex swaps, these central bank liquidity swaps. It's when the Fed lends out dollars to other central banks. And these liquidity swaps, which went way up during the crisis and the pandemic, they've been coming down steadily over the past 2-3 months. But in the last few weeks, I started to see them going back up again. And I was wondering, what's going on? Because most of these swaps were getting closed out. And I noticed in doing a little research into this that the Swiss National Bank was the main counterparty to these new swap lines. So what's going on in Switzerland and with the currency is interesting because the Swiss franc, or I should say the dollar, is at a 5-year low against the Swiss franc. And while Switzerland is mainly concerned with the euro-franc exchange rate, the dollar-franc exchange rate is also very important. It looks like the Swiss franc the Swiss National Bank is entering into these swaps with the Fed as a means of slowing the dollar decline. It just goes to show you how weak the dollar is against some of these currencies, the yen, the Swiss franc, and developing now against the euro. Even the British pound, with all the concerns about Brexit and all the worries about Brexit. That's an interesting situation because we're going on, it's 4.5 years since that Brexit vote. And it still hasn't come to fruition. And every time they get to the deadline where it's like, okay, we got to come to an agreement now or it's going to be a hard Brexit, then it's like, okay, let's just extend it a little bit more. Let's just, give it some more time. So it kind of shows that even though the people in the UK voted for this thing, it kind of seems like they don't really want it. I mean, because it's not happening. It's not happening in a negotiated way. It's not happening in a cold turkey, hard way, so to speak. And I mean, it just, for me, it shows that eventually either they're going to come to some kind of agreement or they're going to scrap the whole thing. But this comes back to my original point, or the thing that I've been saying for so long, is that Brexit had nothing to do, or has nothing to do, with the exchange rate of the British pound. And we have seen the British pound recover from its post-Brexit, panicky, very emotional collapse. We're back up here around 134. That's about a measly 7% down from where it was just prior to the vote in 2016. So it goes to show you once again that, markets can be very emotional. They can be driven by actors or market participants who really don't have a clue as to what the actual fundamentals are or the realities of the situation. Now that creates opportunity for you. You just have to know, you have to be able to see that, and you have to be able to know how to act on that. So yeah, the dollar, as I've been saying, is in a downtrend. It's driven by the fundamentals of the expanding fiscal and the trade deficit, and that's going to be the case. I mean, until that reverses, and until the fiscal policy environment right now reverses, stocks are going to go up, dollar's going to go down, gold and commodities are going to go up, but you have to be patient on that. Right now gold is in a correction, and that's right now the low-hanging fruit. So it's all in the report, as I do every week. I break everything down, banking data and Fed balance sheet and all the fiscal flows. So go ahead, go to my website, pitchbulleconomics.com, and sign up for that 30-day free trial. See everybody tomorrow. Bye-bye.